Hey everybody, Jeremy here. I'm going to keep this update video nice and short for you. So this is a follow-up video, part 2 to yesterday's video where I was talking about a zero risk, no risk trade with potential upside of 10, 20, maybe even $30,000 if the trade worked out. So as promised, I'm doing a follow-up video to talk about what happened. For anyone that hasn't watched that video, go ahead and jump on to YouTube and check it out. I'll put a link in the description of this video for you for part 1. The very, very short version basically is that I had jumped into a trade and had a good enough entry point that I was able to very quickly chase my stop loss up above break even and essentially have no risk to the trade because my break even was already set above, or excuse me, my stop was already set above my break even price, which meant that I already had gains locked in, and I was really trying to take that trade and turn it into a home run trade. And instead of tightening my stops very tight as the price went and eventually letting it tap me out, I kept my stop really loose purposefully because I was looking for a much bigger move that I am anticipating still happening in Bitcoin, but has not happened yet. So the short version is that we did not get the move that I wanted. At one point, I was up about 5K, and then massive volatility set in on the intraday chart. And on Bitcoin, if you're looking at this chart, massive volatility, it doesn't really look like there's massive volatility here. This is a one-day chart, so each one of these candlesticks represents one day, and that just looks like a random consolidation zone, right? But if I go out and I put this in on a 15-minute chart, which is one of the larger ones that I usually use when I am triggering into trades, this was the breakout that we took, entered the trade here, ran all the way up, and then it just came all the way back down. And I ended up chasing my stops up, and I had a stop chased up to 35,600. So I got tapped out right here, and then it came back up just a tiny bit and then crashed one more time. So the question is, now what happens? We got stopped out of the trade. I ended up making a little over $1,200, which is a great day trade. You know, I was in the trade for less than 24 hours. So I'm not complaining by any means. It does hurt a little bit to have potentially had $5,000 in gains that I could have locked in had I chased my stops up how I normally do here and tapped out with the break right here. That probably would have been about a $4,500 gain. 5,000 was up actually at the peak. So about $4,500. So that means I gave back about 3K of gains that I did have in the trade because I was looking for a much larger win. So moving forward, we obviously had a bunch of volatility come in, and I'm going to back this out again, and we're going to talk about the larger time frames and then work our way in to talk about what we need to see develop in this chart before we are ready to take another trade on it. So I still believe that we are going to get that breakout that I've been anticipating, another monster run similar to this that'll push us up to somewhere around the 40,000 mark, maybe even a little above. But in case that doesn't happen, we need to be prepared with our stop losses. And like I said, I did get stopped out of that trade. So moving forward, looking at this, first thing on the daily chart, we have a very clear support zone here, this diagonal line. Each one of these wicks on this daily chart has come down, tested, and bounced right on that diagonal line. So first of all, if we are going to be bullish, we need it to maintain above that. Worst case scenario, if that does break, we could see a wick come down and test this rising 9 EMA, and the bullish action would still be in play as long as the price came back up, and in my opinion, would need to close back up above this diagonal line. We do not want to see it close down below that diagonal line, even if it does hold up this 9 EMA as support. I really want to see it hold these wick lows in that diagonal and show that consistently increasing low for the breakout to really be sound. So that's number one. Next, let's drop into a 4-hour chart. This one, you can really see that diagonal coming into play a little bit more. And we also have a rising 50-period moving average on the 4-hour chart. I really don't want to see a 4-hour candle close below that line. A wick test is okay, But if we see the real body candle of a candlestick close below that line, that's not a good look and will probably wave me off of this pattern unless we get more chart development and it cleans itself back up. But that would make this chart a little bit too messy for me. Third, you guys know that I like to use this trailing ATR indicator. So I have the blue dots here signaling bullish, the purplish kind of pink ones here signaling bearish. So to get interested, ideally, we would love on this 4-hour chart for this to chop sideways and just kind of hold this diagonal line just long enough for these dots to trail themselves down and kind of line up with this 9 EMA and this 20 SMA, somewhere right in this little zone right there. If we could get all three of those to kind of converge in this zone, followed by a price break in a little bit. So we'd have kind of just choppy price action here for a bit. And then finally the breakout of all three of those at once. That would be really, really nice. And by that point, if we still have these little higher lows kind of coming in with this diagonal channel holding, at that point, this breakout would also line up to the ultimate resistance back over here again that has been tested multiple times. And that is on the futures chart at 35,265. So that is kind of the number that we are looking for. We want this to kind of chop underneath that line, but above this diagonal line for a little bit and let all these moving averages and indicators kind of collide on one another. So then let's drop into 1-hour chart. What do we want to see in the ideal world on the 1-hour chart? Okay, so on the 1-hour chart, instead of just a retracement, we actually now have some diagonal resistance that we can start playing with. And I'm actually not super interested if it breaks this diagonal line right now. That's not going to fit my personal rules. One, because we have too much overhead resistance. We have this blue 20 moving average coming in. We have the 50 period moving average above. We have the resistance point right here at this peak of price, which was at 35,415. And then we have the line in the sand from over here as well that we just talked about on the 4-hour chart. So there is just a little bit too much right there for me to want to play. If this price action just goes like this and breaks on through, I will not play that. Instead, I will look for it to retrace down, retest this zone again, and then give me the signal. And this will be my entry point, not the initial break of diagonal resistance. So that's a little bit different than what I was talking about before. Usually I love to play the diagonal resistance breaks, but I need to have the resistance that is overhead clean itself up a little bit for me to really feel comfortable taking that trade. Now, if we get that chopped a little bit, like we were just talking about on the 4-hour chart, these purple dots would turn blue. This moving average would kind of come down, and then we would get a nice clean breakout there. And then finally, let's drop into a 15-minute chart. And this one is starting to clean itself up, actually. So this one, we can see really clear diagonal resistance here. That's really nice. We did test it, came back down, tested again, came back down, set a slightly higher low, but I'm actually going to kind of consider that to be a double bottom. So even though it is slightly higher, I wouldn't mind if price came down into this area. And if you remember just a few minutes ago on the daily chart, we were talking about how it's okay for these wicks to come down and test as long as the price closes back above, right? So on that, this zoomed in image kind of shows what we're talking about. It's okay if this actually breaks down, rolls over again, comes back down into this 34,600 zone, and then chops a little bit, comes back, and then has the ultimate break and allow those moving averages and everything to clean up. And then finally, the chart that I actually trigger on the 5-minute chart here, everything looks good except for this 200 period moving average. I want to see that converge down a little bit more, and then eventually we would get that break of the diagonal. And like I said, we wouldn't be looking to play that. We would be looking to play the break from over here, which again was at 35,265. So 35 to 65 is basically equal to right here. So instead of playing the diagonal break, I would expect price to come up again, chop back down, and then give us the ultimate break higher. So that's kind of what I am looking for. Now, one last thing, a little tip here that I mentioned briefly in the last video. The chart will look slightly different depending on if you are trading futures in a brokerage or if you are looking at the actual Bitcoin spot price itself through something like TradingView. So right now you can see that this 9-period exponential moving average has actually come up and flattened out, and the price of the spot Bitcoin price, it has actually had wicks test below that 9-period moving average multiple times. It's still closing above it, which is okay. A close below that line would kind of invalidate this pattern as well, but the wicks have already been testing below this line. Now, if we go back over here, this is the daily chart, and this is the 9-period exponential moving average for the futures ETF, or not ETF, the futures on Bitcoin. And you can see none of the wicks have even touched it yet, right? So which one do we use for our analysis? Ideally, we want to see them both be clean for the trigger. So we have the diagonal here that we were talking about on the futures. And I said, it's okay if wicks come down as long as it closes back up there. And then here, we already have wicks coming down. But if price broke through that, like it has already done a few times on these wicks, we need it to recover and close back above that line. So that still holds true regardless of which chart we are looking at, but the numbers vary slightly. So what I like to do, I like to look at both charts, and I will actually go back and forth between the two and wait for a signal to align on both charts on short time frames, like 5-15 minutes. Once I see a good pattern on a longer time frame, like an hour or 4-hour chart. That allows me to know with confidence that when I'm jumping into a trade, I have multiple time frames all aligned, which means different traders that trade different time frames are all going to be seeing the same thing, a buy signal. And that's what I want. I don't want to jump into a trade as a buyer when there are 4 other potential setups where people might be taking profit already or not even interested in getting in yet. I want all of the buyers to be lining up at once on as many time frames as possible so that we can all use our money to help push that trade to success. So it's kind of like voting with your dollar. So just a little tip on that. For this to clean itself up, like I said, it needs a little bit of time now, and that could come as early as tomorrow. If overnight we get this red candle here to turn green and the price comes back up and recovers the 34, about 35,000 level, and we get a close between that, but below the ultimate trigger here, that would then set up the next day's candle on Saturday to have a trigger back above the highs over here. So on Saturday, we might have a potential trigger there. Or hopefully in my world, ideally, it would wait until Sunday because the Saturday futures markets are closed. So I wouldn't be able to participate on that because I don't like to trade Bitcoin itself and deal with wallets and everything. And I also like the leverage behind the futures market. So hopefully in the ideal world for me, this will actually just chop and kind of hang out between this 35,200 level on the futures, or excuse me, on Bitcoin and the rising 9 EMA. And then on the futures market, hopefully it will chop between that 35,265 and this diagonal line or the 9 EMA on the bottom. So that's kind of what I'm looking for. And then if that does play out, then I would drop back to a 15-minute chart and either look for a new diagonal to set up or a nice bottoming pattern like a double bottom or an inverted head and shoulders or something like that that I can play and trigger off of. So anyways, I hope that helps, guys. I will keep you posted throughout the next week or two. Each time I jump on and start messing around and take trades on this instrument, I will try to jump in and throw a few videos in to give some people that are tuning in some congruency from one trade to the next to see how my thought process unfolds from one trade to the next. So anyways, I hope that helps. Trade safe. Talk to you soon. Let me know if you have any questions in the comments, and also feel free to smash that like and subscribe button, guys. It really helps me out. I'm trying to get my name out there a little bit and help educate people, and it helps get me in front of people for you to give that algorithm a little boost on my behalf. So that's my shameless self-promotion, and I'll catch you next time.